most profitable crypto strategy. So hey guys, welcome back to the channel again. Hope you're all doing good. And in today's video, we are going to talk about how you can make the most profitable crypto portfolio and discuss some strategies to make it. But before this, make sure you hit the subscribe button and also press the bell icon too. Now, let's get started. Cryptocurrency is now one of the most popular asset classes for investors worldwide, offering a viable alternative to traditional assets like equities, bonds, and real estate. Although crypto is often much more volatile than other investments, it can offer unparalleled returns potential and unique diversification opportunities within a well-structured portfolio. With that in mind, this guide takes a comprehensive look at the best crypto portfolio allocation for both beginner and advanced investors. We'll explore how to build a well-diversified portfolio in detail before presenting a selection of high-potential crypto assets that investors may wish to check out. Best crypto portfolio allocation. Choosing an appropriate cryptocurrency portfolio allocation is crucial for maximizing returns and minimizing risk. Ultimately, this all boils down to the concept of diversification, which is a widely used strategy that helps limit an investor's exposure to a particular asset, instead spreading this exposure over an array of assets. Thus, when constructing a crypto portfolio, investors should always consider this concept of diversification. This means refraining from putting all their eggs into one basket and instead placing their capital in a wide range of cryptos. Importantly, these cryptos should be different from one another, as this will ensure their returns are sufficiently contrasted. For example, investors may wish to purchase cryptos with different use cases, sizes, token structures, and roadmaps. It's also wise to be aware of the most searched crypto projects, as these are often trending and offer excellent returns opportunities. Regardless of how a crypto is structured, investors must regularly rebalance the portfolio composition, ensuring that non-profit assets are removed and replaced with more effective ones. Finally, investors should also be aware of their unique risk tolerance and construct their portfolios accordingly. Some investors may be risk-averse, so they should stick to large-cap cryptos with the lowest volatility. Bitcoin and Ethereum are prime examples of this. On the other hand, certain investors may be risk-tolerant, meaning they are happy to purchase higher volatility assets or invest in the best crypto pre-sales. Although the risk factor is much higher with these assets, they often provide greater returns than their safer counterparts, which is worth bearing in mind. Building a diversified crypto portfolio, core strategies. According to CoinMarketCap, the cryptocurrency market is now valued at over $1.1 trillion, more than double its value in 2020. The current scale of the market brings limitless investment opportunities, meaning it can be overwhelming for new crypto investors. Fortunately, there are several tried and tested strategies for finding the ideal crypto asset allocation. Let's take a look at a few of those strategies below. Combine well-established cryptos with new pre-sale projects. When creating the best crypto portfolio allocation, one of the most important things to do is invest in cryptocurrency projects of varying sizes. This ties into the concept of diversification highlighted earlier, since different size cryptos will often produce different returns. For example, market leader Bitcoin is likely the most popular crypto asset investors look to add to their portfolios. However, Bitcoin's returns are often incomparable with smaller cryptocurrencies like Arbitrum and Phantom. Thus, investors can optimize their portfolio's risk-return ratio by investing in both small and large cryptos. Risk-tolerant investors can even go one step further, and considering brand new cryptos going through their pre-sale phase is a prime example of this. As a pre-sale crypto, it has unparalleled returns potential that well-established projects don't have. Investors happy to take on a little extra risk could invest in crypto pre-sales like Love Hate Inu to exponentially increase their returns potential. Although this approach will increase risk simultaneously, since these projects are in the early stages of their growth, it can prove fruitful over the long term. Diversify across different areas of the market. Another important aspect of crypto portfolio management is diversifying across different market areas. Not all cryptocurrencies are made equal, meaning each has its own specialty within the context of the broader crypto sector. As such, a crypto that operates in one area will often produce different returns than one operating in another. Thus, investors may wish to research the best cryptocurrency to invest in from several areas to ensure their portfolios are well balanced. Here are some examples of popular areas within the crypto market right now: decentralized finance, metaverse cryptocurrencies, NFT projects, blockchain gaming cryptos, peer-to-peer payment solutions, artificial intelligence cryptos. Cryptos involved in different sectors will have different use cases than one another. Again, this ties into the contrasting nature of their returns, so it's a good idea to consider various areas of the market to help lower a portfolio's overall risk. Consider cryptos from various blockchain networks. Identifying the best crypto portfolio allocation will also involve investing in cryptocurrencies from different blockchain networks. This may seem like a common sense, but many investors fail to realize that the asset they are investing in are highly correlated with the blockchains they are linked to. Take Uniswap and Aave as an example. Uniswap is a massive decentralized exchange hosted on the Ethereum blockchain, while Aave is a leading protocol built on the same blockchain. As such, these cryptos have returns that are inextricably tied to Ethereum's performance. If Ethereum suffers a huge crash, then Uniswap and Aave's prices will likely fall, meaning it's a good idea to purchase coins or tokens from other blockchains too. Some other blockchains that investors may wish to consider checking out include the following: Solana, Cardano, Ripple, Stellar, Hyperledger. Invest in crypto-focused stocks. Although finding the best credit crypto to buy is undoubtedly one of the most effective way to gain direct exposure, some investors may prefer to gain indirect exposure to the crypto market. A popular method of achieving this is by investing in crypto-focused stocks. Investing in these stocks effectively diversifies a crypto portfolio since their returns differ significantly from crypto. Stocks are also usually much less volatile, meaning they can be an excellent option for investors with lower risk appetites. Some examples of crypto-focused equities include Coinbase, one of the world's leading crypto exchanges, traded on the Nasdaq. Marathon Digital, a Bitcoin mining company based in the US, trades on the Nasdaq. MicroStrategy, an IT company that is heavily invested in Bitcoin, trades on the Nasdaq. Robinhood, a brokerage app that offers low-cost crypto trading services, trades on the Nasdaq. Make sure to rebalance regularly. The final point to remember is that the crypto market is ever-changing. As such, investors must be prepared to rebalance their portfolios regularly. This ensures that assets exhibiting poor performance are removed and replaced with assets that have a higher chance of positive performance, thereby increasing the overall returns potential of the portfolio. So, these are some of the best strategies by which you can build a most profitable crypto portfolio very quickly. So, that's all for today's video. Hope you guys enjoyed the video. I will see you in the next video. Till then, bye bye and thank you for watching.
What we do here is go back, 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 back.